Now for the last part of our revision, final accounts and adjustments. And this is now the pudding, the nice one. Adjustments you will see in grade 10, in grade 11 when we do partnerships, and you will see it again in grade 12 when we do companies. So some of the adjustments that we do in grade 10, you will get at the end of your grade 12 year again in your final paper. So make sure in grade 10 that you understand it, that you grasp the concept of year-end adjustments. What is happening at the end of the financial year? We've looked at the accounting cycle last term, where we said that we will start with a transaction that must take place. There must be an interaction between two parties where money is involved. Then there must be a piece of paper, source document. It must be written on an invoice or printed on an invoice or a receipt. There must be some kind of paper trail. That's the source document. Then we will put it in the journal. We said that the journals are like boxes that you organize the different transactions in. CRJ and the CPJ, DJ, DAJ. We've done the creditors journal, creditors allowance journal. We've done the petty cash journal and also the general journal. And then we've posted those to the general ledger as well as the debtors ledger and creditors ledger. We've done those postings. And then we prepare a trial balance. Now this happens, transactions on a daily basis, source documents, journal posting, and at the end of every month we prepare a trial balance. Now we are at the end of the financial year. At the end of the financial year, and this is where we are now, financial statements. Now financial statements will actually only be next term, but we are going to start preparation for that by looking at the closing transfers and the adjustments. And after the financial statements, the analysis and interpretation. The pre-adjustment trial balance, that is now the 12th trial balance that we've done during the financial year. Remember, financial year is any 12 consecutive months. Our calendar year starts on the 1st of January, ends on the 31st of December. A financial year can start any beginning of a month and end 12 months later. So the pre-adjustment trial balance is the trial balance at the end of the financial year. That is the 12th trial balance. Then we do the year-end adjustments, where we add and subtract, where we look at things that we've paid in advance or income that is still receivable. Then we prepare the post-adjustment trial balance, and then we do the closing transfers, 8 of them, where we get rid of all the nominal accounts in order to calculate the net profit. Then we prepare the post-closing trial balance, and then financial statements and analysis and interpretation. Now the information in the post-closing trial balance is the same as the information in the statement of financial position, and the statement of comprehensive income will be the same information as in your trading account and your profit and loss account. Now we are here at the year-end adjustments. Post-adjustment trial balance, that's the longest one, and the post-closing trial balance is the shortest one. Now when we start with these closing transfers and year-end adjustments, trading account, profit and loss account, then we can ask you the post-closing trial balance. But we are actually heading here to the financial statements, the important one. But everything we do now is necessary to prepare you for those financial statements. We know that the gross profit, gross, again the big letter, equals sales minus cost of sales. Now what is cost of sales? Cost of sales is the cost price of what we sold. So if we take the sales amount of money that we received for that, and we subtract the cost of those items that we sold, then we get the gross profit. The net profit, the smaller one again, is that gross profit plus other income minus all the expenses. Now the gross profit calculated in the trading account, while the net profit is calculated in the profit and loss account. We have these two closing accounts, or we refer to them as final accounts: the trading account, profit and loss account. Now we start with the nominal account section of the trial balance. In order to calculate the net profit, we must take the gross profit, sales minus cost of sales, plus income minus expenses. And all of those will appear in the nominal account section of your trial balance. Trial balance, sales, cost of sales, debtors allowance, and then the rest. So obviously we start with sales. But we know that the debtors return goods in the debtors allowance journal, and that debtors allowance will cause the sales to decrease. So that is why it is our first closing transfer. Debtors allowance to be closed off to sales. Then sales to be closed off to the trading account, cost of sales to be closed off to the trading account. And by taking sales minus the cost of sales, we get the gross profit. Gross profit to be transferred to the profit and loss account. All the income accounts must be closed off to the profit and loss, expenses to the profit and loss. And by taking the gross profit plus income minus expenses, we get the net profit that will be transferred to the capital account. Capital account, the owner's account. Because the capital contribution, that is what the owner puts into the business, plus he receives the net profit minus the drawings. We close off the drawings to the capital account. So there are 8 closing transfers. First one, debtors allowance to sales, sales to trading account, cost of sales to trading account. Then we calculate the gross profit and transfer it to profit and loss number 4, number 5 all the income, 6 all the expenses, and then we calculate the net profit by taking gross plus income minus expenses. Transfer that to the capital account, and then drawings to be closed off to the capital. So if you remember this, you will always be able to do the closing transfers and know the format of your trading account and your profit and loss account. Adjustments that we're going to look at: depreciation, we've already looked at that one. Bad debts, we've done that one last term when we did the general journal where we write off a debtor. Trading stock deficit or trading stock surplus, where the counted stock is more or less than what we have in our books. Consumable stores on hand, stationery that we still have on hand, haven't used. Salaries and wages journal, that was left out. So now you can see how our revision activities on salaries and wages will help us in this adjustment. And then we have the 4, accrued expense, accrued income, prepaid expense, and income received in advance. Because we are working in a financial year, we want to add the accrued. So if I've paid the telephone account only for 11 months, that's not my real expense for telephone. My real expense is for 12 months. So we must add that other month. The same if we've received rent income for 14 months. We can't say that's our income for rent because the financial year is only 12 months. So we must subtract the 2 months that we've received in advance so that we can show the real income for the year. And that is what we do with adjustments. And the GAAP principle that we are applying here is called matching. And it makes sense because we match the expense with a year, or we match the income with a financial year. And that is what we do with the adjustments. First one, bad debts. We debit bad debts and we credit the debtor and debtors control. Bad debts, which is an expense that will be shown in the profit and loss account. Debtors control, post-closing trial balance. Trading stock deficit is an expense, and we will credit trading stock. This is an expense that will decrease owner's equity, and the assets will decrease. Trading stock deficit to be shown in the profit and loss and as an expense, post-closing trial balance, the trading stock account. But it can happen that by mistakes that we made, recording that was done incorrectly, we can also have a trading stock surplus. In other words, when we counted the stock, we had more on hand than what was shown in the books. So now the trading stock surplus becomes an income that will increase the owner's equity, and we will have to add to the trading stock. Trading stock surplus, profit and loss account as an income. Consumable goods on hand, we create an asset. Consumable goods on hand becomes an asset, and we credit stationery and packing material, because this is what we have left at the end. We know these are expenses, so it will influence the owner's equity. This is an asset that increases. We know assets equals owner's equity plus liabilities. Stationery is an expense, but we can't say it's a minus, because then our equation is not working anymore. The owner's equity will increase. Why? Because it's an expense that decreases. And the moment expense decreases, the owner's equity will increase. And this is what we will show on the profit and loss account, that one on the post-closing trial balance as an asset. Salaries and wages journal omitted. We will debit salaries and credit all the payments. These are all liabilities that will increase. This is an expense that will decrease the owner's equity. That's the big G, gross, that will be shown in the profit and loss account. These will be shown in the post-closing trial balance. Also the contributions. Contribution, remember the GC, the gross and the contribution will be shown on the profit and loss account, because they are expenses that will decrease the owner's equity. And the pension fund or whatever other fund will increase the liabilities. Therefore, we will credit that, will be shown on the post-closing trial balance. Accrued expenses, we still need to pay the telephone account. That's a liability. If I owe somebody money, it's a liability. We debit telephone, owner's equity will decrease. Accrued expense, a liability that will increase. This is the one that we will show on the profit and loss, accrued expense, on the post-closing trial balance. Accrued income, somebody owes me money. Therefore, that's an asset. And we will credit the rent income. Asset increases, owner's equity increases. This is the one on the profit and loss, on the post-closing trial balance. All the assets, all the liabilities will be shown on the post-closing trial balance. Income expense accounts will be shown in the profit and loss account. Prepaid expense, we've paid in advance. We've already paid for insurance. So now they owe me something, they owe me the insurance. Therefore, prepaid expense is an asset. And insurance is an expense that decreased, therefore the owner's equity will increase. And this is the one we show on the profit and loss. That one will be shown on the post-closing trial balance. Income received in advance. The tenant already paid the rent. We owe him something, we owe him the rent. We debit rent income and we credit income received in advance because it's a liability. We owe somebody something. Rent income is an income that decreases, therefore owner's equity will decrease. This is the one that we will show in the profit and loss account. This one will be shown on the post-closing trial balance. Accrued, you add. So the A and the A, whenever it is accrued income or accrued expense, you add the amount to the pre-adjustment figure. When it is prepaid, then you will subtract from the amount on the pre-adjustment trial balance. We are going to look at activity 4 in your activity book, page 15 and 16, and in the answer book, page 11, and it's only the trading account and the profit and loss account. Obviously, they can also ask you to show the post-closing trial balance. Now, this is information that was taken from Glyn Traders. The year ends, again, important piece of information, last day of February 2022. They give us an extract, the capital, there's a fixed deposit, and the interest is 7% per annum. Trading stock, bank, we've got a favorable bank account. Loan, we borrowed money at 14% per annum. All the nominal accounts, sales, question mark at cost of sales, debtors allowance, all the income, all the expenses, question mark on interest on loan. All the income accounts, we must get rid of the income accounts. How do we do that? We debit the income account and we credit profit and loss. All the expense accounts, we must get rid of those. What do? We credit them and we debit profit and loss. And then we know these first three. We close off our first closing transfer. We subtract that from sales. Then sales to be transferred to trading account, cost of sales to trading account, and then we calculate the gross profit. So the trading account and the profit and loss account only looks at the nominal account section. Balance sheet account section, that will be shown on your post-closing trial balance. Now the first thing we do is we do the donkey work. We rewrite from the question onto the answer sheet. We know the format. You must know this as you know a picture. Trading account on the credit side, sales, and we know we must subtract debtors allowance. So that's the first thing that we do. We already subtract debtors allowance. Cost of sales wasn't given. We know this will be the gross profit that will be transferred to the profit and loss account. All the income accounts, and there we rewrite the amounts from the question paper onto the answer sheet. That's the donkey work that we do, and the format. Now we can start with adjustment number 1, and now we just add and subtract to that. The first one says no entry was made for a credit note issued to a debtor for stock returned, 5,000. That will obviously be the selling price. And these goods were marked up at 60% on cost price. The goods were placed back in stock. That means it was not totally damaged. We can put it back. Now this is obviously debtors allowance journal. In the debtors allowance journal, we debit debtors allowance, debtors control account. Then we have the trading stock account, and we have cost of sales because the stock was placed back into stock. We must calculate the cost of sales. Selling price 5,000. We want to know the 100. We want to know the cost price. They gave us the 160. So the cost price 3,125. Unknown on the known. If the cost price is 100, the markup is 60, then the selling price will be 160. In this case, we want to know how much is the 100. They gave us the selling price. So unknown on the known times the amount. Okay. Debtors allowance journal, we debit debtors allowance, we credit debtors control with the selling price. This is an asset that decreased. Debtors allowance will decrease my sales. So this one must be closed off to sales. We received the stock back at cost price 3125 and cost of sales to be credited. Trading stock, an asset that increased, and cost of sales will decrease because this is an expense that decreases. So on our trading account, next to sales, we will have to subtract another 5,000. That is part of the debtors allowance to give us the net sales, 1,538,600. Cost of sales not given, but they've given us the markup percentage, 1,538,600 times, we want to know the cost price, they've given us the selling price. So this is the cost of sales, 961,625. Gross profit equals sales minus cost of sales to give us the gross profit. And obviously these two must add up to 1,538,600. You never have a balance on a final account, on a closing account. Never. So there's your gross profit that you transfer to your profit and loss account, 576,975. So we're done with the trading account. Adjustment B. According to a physical stock take, the following stock was on hand. We counted. This is the figure that will appear in your statement for financial position because this is the actual stock, is 135,000. In our books, pre-adjustment trial balance showed us trading stock of 114,700. Adjustment number A said we haven't made any entry for that stock that was returned. Therefore, our amount for trading stock in our books will be 117,825. But now we've counted 135,000. So there's a difference of 17,175, a surplus, more than what we had in our books. According to our books, 117,000, counted 135. This is the correct one. So a surplus, so we will credit the surplus and we will debit the trading stock so that we can show the 135,000 in our statement. The stationery that we have on hand, we haven't used that. So that must be subtracted from stationery. That is consumable goods on hand. In our profit and loss account, trading stock, not deficit, this was a surplus. So trading stock surplus, the 135,000 that was counted minus the 117,825 to give us a surplus 17,175. And then in the post-closing trial balance we will show the 135,000. Stationery, we've paid 19,800, but we haven't used everything. We have on hand 2,300. Therefore, the expense for stationery will decrease so that according to the matching concept, we only used the real expense for stationery is 17,500. Adjustment number C said a debtor, I am sorry, who owes 900 Rand must be written off. Bad debts must increase. We must write off another 900 Rand as bad debts, so that our real amount for bad debts 13,200, and obviously we will subtract the 900 from debtors. D says that the telephone account for February has been received but not yet paid. We've paid 16,700 for telephone, but we haven't paid February's telephone account of 3,100 yet. Accrued we add. Accrued expense we still need to pay February. Therefore our real expense for telephone is 19,800. According to our matching concept, we match the expense to the year. Although we've only paid 16,700, the real expense is 19,800. Adjustment number E, the annual insurance premium. Annual means for a year, was 8,400, and it was paid on the 1st of October 2021. Our year starts the 1st of March. April, May, June, July, August, September, October, November, December, January, February. We've paid this on the 1st of October for a year. But only 1, 2, 3, 4, 5 months is within our financial year. Therefore, we've paid 7 months in advance. So the 8,400, 7 months of that amount is for the next financial year. In advance, we subtract. We already paid, but the expense is not for this year. So we must subtract that from insurance, so that our real amount for insurance will only be for this year. We've paid 56, but of that 4,900 is for the next financial year, so our expense 51,100 for insurance. Now the next one, very nice. You will see this grade 10, 11 and grade 12. And you always ask, is that the X one, where you must calculate X? Yes. The rent was received up until end of April 2022. Our year ends on the 28th of February. So we've received in advance. So we know we must subtract. Now we can say, okay, just divide by 14 and multiply by 2. Then we've got the amount that was received in advance. But now they say the rent was increased by 10% on the 1st of January. So there goes our plan. We can't just divide by 40. Our year starts in March. April, May, June, July, August, September, October, November, December, January, February, end of the year, but we've also received for March and April. And then on the 1st of January, the increase took place. Now you may think this is time consuming by writing out the months, drawing your timeline, but the moment you see it, it makes sense. Under exam conditions, sometimes you miss a month. When you start counting on your fingers, you miss an amount or a month. So please take the time and rather write those months out. Sometimes you get confused which month is after which one. Make sure you study that. Make sure you know the months. From the 1st of March up to the 1st of January, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months. And that was the original rent. For the other 4 months, it was that original plus 10%. We say 4 months because they said we received until the end of April. For 10 months, it was unknown. For the next 4 months, it was that original rent plus 10%. 10% is 0.1 of the original, 0.1x, and that gave us the 115,200 on the pre-adjustment trial balance. Now when we solve x, we know we must multiply that 4 into the brackets, plus 4x plus 0.4x. Now they're all x's, so we can add 10 plus 4 plus 0.4, 14.4x, 115,200. So x will be 8,000. 8,000 per month, but that was the original. We want to calculate how much in advance, and that was after the 10%, and that will be the 8,000 plus 800. 8,800 per month. But that was in advance for 2 months. Therefore, if we multiply that by 2, 8,800 times 2, we get the amount in advance, 17,600. For these months, 10 months, it was 8,000. 8,800, 8,800, 8,800. Those two 8,800s in advance. So that's the one method. The other method that you can also use, you have 10 months where you receive the original, the 100. Then for the next 4 months, it was an increase of 10%. That's why we use 100 for the percentage. So that is 1,000. 4 times 110, 440. So in total, we received 1,440 parts. But we know these two is in advance, and they are both from the 110. So 220, 2 times 110 of the 1,440 times the amount given will give you the amount that you've received in advance. It will also give you 17,600. You must decide on a method that suits you best, that you understand, and that is the method that you use. When you get to this part, then you're there. Just setting up the equation is the difficult part. From there, solving the equation is not supposed to be difficult for you. This was done in maths grade 8 or 9. Timeline, important. Rent was received in advance. In advance means subtract. So the rent income minus 17,600 to give us the real income for rent, 97,600. Fixed deposit was invested on the 1st of March. We read that as the beginning of the year, first day of this year. At ABC Bank, the interest was received for 9 months only. So we still need to receive interest. The fixed deposit was 60,000. If you look on the pre-adjustment trial balance, and there they give us the interest rate of 7%. We only received for 9 months, so 3 months still outstanding. Accrued income. We still need to receive income for rent, interest on fixed deposit, 1050. Accrued, we add 1050 to give us 4,200. And if you take 60,000 and you calculate 7% of that, it will give you 4,200 that you have to receive for the full year. Next one is where interest is capitalized. Now, interest capitalized just means we add that to the loan amount. At the beginning of the year, 1st of March, the loan was 210. Then we add the interest we've paid, subtract, so put it in brackets, during the year installments, and that included the interest, to get the balance at the end. So now we can calculate that question mark. If we start from the bottom, 180,000, now we swap the signs, 65,000 minus 210,000 will give us 35,000. If you work from the top, you keep the signs, 210,000 minus 65,000 minus the 180,000 will also give you 35,000. And you can test this. 210 plus 35,000 will give you 245,000 minus 65, 180. If we capitalize, then we add the 35,000 to the loan, and interest on loan will be debited. They haven't given us the interest on loan. On the pre-adjustment trial balance, it was a question mark. So we just need to add that to the interest, or show that as the 35,000 for interest on loan. We've done the calculation, the 35,000. It's not accrued expense. If interest is not capitalized and we still need to pay interest outstanding, then that will be accrued expense. But when we capitalize, we just add that to the loan. The next one says we have to provide for depreciation. Now, somewhere in another question, they would have asked you to do depreciation and all the calculations. Therefore, when it comes to this question, they just give you the depreciation. Because in grade 10, we will still ask depreciation as a separate question. Later on, grade 11, grade 12, depreciation will be part of the adjustments. And now for the last one, salaries and wages. This is where the salary journal for February was omitted. One employee. Now, because we've done salaries and wages, it makes sense to us, because we know that net salary equals your gross salary minus the deductions. But now we want to know the gross. They haven't given us the gross. That will be the net salary plus the deductions. So your gross salary, the net plus the deductions, 22,600. And remember from our other revision that we've done, we said the gross and the contributions, those two are the expenses. In this case, they said that the employee's contributions are added under salaries and wages. So we don't have a separate account for contributions, but it is added to the salaries and wages. So there's our contribution. All the rest must be shown on the post-closing trial balance under liabilities. Profit and loss account, salaries, we add the gross salary that we've calculated, 22,600. We also add the contributions, 3,600, to give us the total salaries, 222,200, 222,200 Rand. Because we've done the donkey work, now we can only rewrite the amount that we've already copied from the question paper, from the pre-adjustment trial balance. Now we don't have to page over and find the amounts already there. We can just rewrite those. No adjustments were made on those accounts. Now we need to calculate the net profit. gross profit plus all my income accounts will give me a total 697,850 minus all my expenses. If I subtract all the expenses, then I will get the, sorry, there's a line missing here. That total 697,850 minus all the expenses will give me the net profit 223,950. And where do we take the net profit? To the capital account, because it belongs to the owner. This is the net profit. And obviously, if we add up this debit side, it will also add up to 697,850. Never, ever, ever a balance on the profit and loss or the trading account. Final accounts, closing accounts, they close off, and this net profit is transferred to the capital account. Obviously, a post-closing trial balance can also be asked, where you show the assets and the liabilities and the adjusted capital amount on that trial balance. And I think you will agree with me that this was really the pudding for today. Adjustments, really very nice, and I hope you've enjoyed this, and I trust that this will really help you in your preparation for your tests and your exams. Good luck for the rest of term 2, and we will see each other again somewhere in term 3.